Hey guys, welcome to the Market Minute. Listen, markets don't hate bad news. They can handle it. If it's built in, they can deal with it. Companies deal with problems, they overcome them. But markets hate uncertainty. And that's exactly where we are right now. You take a company like Adobe and the whole software sector that is really, really under pressure because of AI. That doesn't mean that this company disappears. It doesn't mean it's dead, but it does mean that a lot of traditional moats, a lot of margins, a lot of brands, a lot of protected kinds of franchises are suddenly under real pressure. Why? Because AI is really that good. We've really moved into a much more binary market world. Either a company figures it out, they integrate AI, they protect their pricing power, their brand, they defend those margins, and then maybe the stock rips 100% higher, or it doesn't. And suddenly, there are 10 new competitors that really build faster, cheaper, good enough products that compete with these guys. And often they're built by teams that didn't even exist a few years ago. You don't even need to be a coder. You can just create this stuff with a prompt. Markets hate that. And for decades, those outcomes for companies were narrow. They were predictable within a certain range. Cash flow models worked, PEs worked, margins told a clean story. The range of outcomes has blown wide open in certain areas of the economy and industries. That's why traditional metrics feel a little bit less useful right now. Not because cash flow doesn't matter, but because the durability of that cash flow is in question. Debt loads might suddenly matter more than growth. Balance sheets are going to decide who survives the transition, as well as decisions in the boardroom that we can't know anything about right now until they report and tell us what direction they're going in. So, does one mega platform eat everyone like Google? Probably not, but they're certainly making some good headway to doing that at the moment. And that's making things very uncertain. That's what markets are starting to price in. They don't care about cash flow in the last quarter or the quarter before that. And so you can clearly see some of this having developed over time in the long dated option pricing. Volatility isn't about near term moves anymore. That's very short term oriented. It's about radically different futures being possible at the same time. And that is the shift that has moved into the longer term options, really pricing in a world change and a state of disruption. So this can be an absolutely fascinating time to be alive as an investor, but it's going to be full of potholes. The playbook is changing in real time. You've got to understand what is happening out there. Just my opinion, not financial advice. We'll see you next time.